What's up, everybody? Welcome back to another episode of the Believers in Business podcast. I am your host, Brian Adamson, and I have somebody very special with me today. All right, for you coaches, consultants, business owners, you are going to need to not only listen to this man, many of you are going to need his help. I got my guy, Ryan Cabrera, here with me today. He is a merchant service extraordinaire, payment processor extraordinaire, and an even better man of God. And so I'm just appreciative, bro, to be able to sit down and have this conversation. This is actually our first live podcast that we've done. I normally do them virtually.
Yeah.
And thanks for you for sharing your humble abode here with me today.
It's my pleasure.
We could get this thing knocked out. And so I think right off the bat, right, because everybody already on the edge of their seat. Collecting money is important, bro.
Oh, 100%.
And I got some tough lessons that I had to learn the hard way, which I'll share in a minute. But if you could in very simple words, share with the people, what is payment processing merchant services?
No, it's a great question. I think the thing that taught me how little information there is in the general marketplace about payment processing is when I would try to hire people to work in our operations staff, just admin and things like that. And I would ask the question, like, have you ever heard of the payment processing industry? Are you familiar with payment processing? And man, like, I mean, even though people use it every day, there's very little information that the general public has on payment processing. But the long and short is that we help businesses accept the preferred form of payment of their customers, right?
I like that.
So, and then we add a layer on that because we're really on the merchant advocate side, right?
Okay.
Unfortunately, if you've been in business for long enough and you have had payment processing accounts, you start to feel like the redheaded stepchild because there's a lot of protections for consumers, but it seems like all of those protections come at a cost to the merchant, right? Because somebody has to pay for it, you know? And really that's the economy in general. If you think about the way tax structures work and things like that, it's the producers, the ones that are hustling, the ones that are working and actually doing work, they get taxed at the highest percentage. That's why everybody has all these little, things about how to make your tax bill go down. None of them involve make business income, right? When all of us know making business income is the best way to make the most income, right? That's your best chances for making the most income. It's a weird dichotomy that we live in where in order to get our taxes down, we have to do the very thing that lowers our income, right? That's beside, that's kind of a side note. But it works the same way in payment processing though, but the merchant kind of always feels like they get the short end of the stick. And so I grew up in a home where my parents were small business owners. I'm a small business owner. I'm entrepreneurial. I love entrepreneurs. And so I may have gotten into this business in a way that was to build residual income. That was kind of my mindset. It was money focused. But I've only lasted 15 years in this industry because I love business owners. And I see them as the lifeblood of the American economy. I see them as heroes and helping them do what they do best and put the other pieces that they don't need to be doing on our shoulders is kind of been my little niche in the marketplace. I think that it's helped. I mean, and we have a variety of clients, man. I mean, like that's one of the coolest things is as an entrepreneur, all of us entrepreneurs are all a little bit ADD, right? I've been able to do a lot of different things in a lot of different industries. I've seen what success means in a restaurant. I've seen what success means in an e-commerce store. I've seen what it takes to be successful in many different places. And again, just like bankers, us in the payment processing industry, we know who's booking, who's cooking, right?
For sure.
And we know who's not. And I can see the difference between a plumber that is, got 12 trucks on the road and is just crushing millions of dollars a year, and the guy that's got one truck and he's been in that position for 10, 15 years. And I can visibly see by interacting with the two of those in contrast, what is it that separates the two from a success standpoint, why one does better than the other. And so again, back to specifically the payment processing piece, just an example that will give you kind of a mindset, entrepreneurial idea of what I'm talking about in those success pieces. Think about two guys that own lawn care businesses, right? I always tell young guys, hey, you want to go learn business? Start a lawn care business. You could do that at 15 years old, I've got actually one of my best friends, his sons, he's got 4 of them, but the 2 older ones started a lawn care business. They got 20 clients at 15 years old. They got cash, nobody else has cash, you know what I mean? In the friend group, these guys got cash. But like elevate that to the adult level. And there are guys that are going to chase checks for the rest of their life because they are still trying to get paid on Zelle, right? They're still trying to get paid by check, by cash. They're still going to go around to every house and they're going to wait for their money because they think that they're going to save money on fees.
They still got a receipt book that they write their thing on.
Exactly. You're not, I mean, it is what it is. And then you got the guy that's got 6 crews, right? And they're doing HOAs and they're doing commercial lots and they're doing land clearings and they're doing all kinds of cool stuff. And they've got routes with hundreds of clients because they bill on a monthly basis. They bill like clockwork on the same day every month. The only checks they're chasing are the ones that decline on either ACH or card, and everything's set up on autopilot. Why? Well, because they're not worried about money. They know the money's coming in on the first. It's coming. They can focus on the other pieces of the puzzle of their business that are going to help them scale. You know, training their crews, doing all the other, you know what I mean? All the other pieces.
Strong. That's strong. I got a couple questions today.
Yeah, please. Yeah.
So one, I'm gonna need you to hold.
Yeah.
Okay. So the one that I need you to hold is, how involved do you guys get in helping them get that money from said vendor or client,
Sure.
right? Okay. So that's the one I want you to hold.
I'm gonna hold that. I'm gonna put it over
But
here.
then I want you to give a teaching moment for somebody that's probably in a similar spot to where I was when I started. Okay. So when I started my coaching program, I started out with this 5K offer.
Okay.
Then through the great advice of some wise counsel, went up to almost 47,000 over a 6-month period. Okay. And there were some increments along the way. Went 15, 20, 27. So I didn't know what payment processing, like it never occurred to me until somebody was like, "Can I use my credit card?"
Yeah.
Yeah. Let me figure out how to do that.
Right.
So then I go and I open up, say, a Chase merchant account, right?
Yep.
Bank of America merchant account.
Yeah, big bank. Yep.
Right? And they're like, "Oh yeah, go ahead and start using transactions." But you make a jump from 5 to 20.
Yep.
And then one from 20 to 27, one from 27 to 47. Oh yeah, they'll let you use it until they don't.
Right.
And they will shut you down, return that money back to whomever it came from.
That's right.
And you are officially out of business because you can't collect money.
That's right.
Tell me what I did wrong, and hopefully somebody don't have to go through the same issue.
No, man, this is the coach and consultant problem in a nutshell. I mean, you articulated the problem very well. And it starts with the first misunderstanding of what is payment processing. So you kind of hit the nail on the head on the beginning with the question. In reality, you're setting up a loan account, right? They're giving you money as a processor before that money comes back in the back end to them, right? Because there's a process that has to go through before it makes it to them, you know, on the clearing stage. And then on top of that, because of the Consumer Protection Act, chargebacks, which that's the evil word, you know, that everybody worries about, you know, in the coaching and consulting is, you know, dealing with chargebacks and all that. It's legally mandated that that consumers have 180 days, 6 months to go back and charge back fraudulent transactions. Now keep in mind, this is all from a protection standpoint. Why do these protections exist? Well, let's just imagine that the Wild West, before those protections existed, some merchants misused credit card numbers and caused a bunch of problems.
Okay.
And they realized that now that we're not using a durable good, right, a banknote to hand from one person to the other, the transaction's over. Nobody has to worry about, other than now I have to worry about where I'm going to store it in a safe, in a bank or whatever. The transaction itself was simple, the passing of the money. Okay. The minute I turn that into an electronic thing, now there's some risk there that somebody got a hold of that number, you know, in some other way and started charging my account and whatnot. And that's where the chargeback protections come in. So the chargeback protections make sense, especially, I mean, I don't know of anybody that's had a bank account for more than 10 years that hasn't had some fraudulent transaction come on their account. Somebody charged their card. You know, you get a call from the bank. Are you currently in, you know, I don't know, Nigeria, you know, or Bangladesh? No, I'm not.
You got to do Nigeria like that, man.
Well, because I picked Nigeria on purpose.
That you did. No, that's funny.
But it could be, you know, in Utah. Are you in Utah right now at the Walmart? It's like, no, I'm at the Home Depot in Brandon, you know, whatever.
Yeah.
So the risk in payment processing is the chargebacks for the processor. So this is where, and I'm going to build.
So it's not that the bank don't like you.
Oh, it's for sure not that the bank doesn't like you. It's that the bank, I mean, it may be that the bank doesn't like you because of your chargeback risk.
Okay.
But we'll build this because I think it's understanding the fundamental piece of how the risk happens to the processor and to the bank will help understand why they behave the way that they do.
I like it.
When it comes to things, right?
Okay.
So the risk to the processor that is underwriting your account, right? So they gave you an account, they said, hey, go ahead and use it. If you are doing $10 transactions and somebody comes and charges one back, $10 is not a big deal to lose. And it's very simple to take that money back from you. And it's a high probability that you'll have at least $10 in your account to come and get back, right? So that's why low risk accounts are low risk for a couple of different reasons. But one of the reasons is they have a low chargeback risk dollar wise.
Okay.
So a restaurant, I spent $50. My biggest risk on that chargeback is $50. The restaurants are also low risk because people have their card in hand when they're paying, right? So that's a secondary piece of it. What is the worst case scenario for a bank? The worst case scenario is that somebody goes and does a bunch of fraudulent transactions. They take a bunch of people's money. They clear those funds out of the account. And then when it comes time for all those people that now got defrauded to come back and get their money, and they submit a dispute to their bank, right, to the card company, and that card company now says, hey, processor, we need to get that money back. The processor comes and now it's empty and they can't get those funds. All right. That is where chargeback risk comes in. So you can imagine just the size of the dollar amount of your transaction at $47,000 is a much bigger risk to the processor than a $5,000 transaction.
Got it.
All right. So that is a major piece of the puzzle. Also, the fact that, in the coaching and consulting space, unless you're at live events, which most people aren't when they're taking these transactions, although it does happen sometimes, you're not taking transactions on a credit card machine with a reader, right? Taking the chip, card present transaction to where they know it's a more secure transaction. In most cases, these people are buying your program. They're going to a website. They're keying their information in online, right? So that, as you can imagine, a card present transaction is more secure than a card not present transaction, right?
Sure.
So now it's risky for two reasons. It's a big dollar amount and it's a card not present transaction. It's an online transaction.
Got you.
So what does this do? Now let's add a third layer onto this. The third layer is the industry. Look, not for nothing, the coaching and consulting industry has some knuckleheads in it who overpromise and underdeliver. People feel dissatisfied to the point where they're only, even if people, there are a certain subset of people that won't even ask you for a refund because they're embarrassed and they'll just go do a dispute, right?
That's very true.
But
because you almost wonder, dang, if you'd have just talked to me, I'd have gave you your money back.
Correct.
Yeah.
Correct. But there's another group that will ask for a refund to these coaches and consultants, and they'll say oh no, this was a no refunds, it says it right here on the contract or whatever. And that person may be correct. They may have put it on their contract, right? But it still means that there's going to be a chargeback. And depending on that dollar amount, a lot of these people, they got to buy that Lamborghini pretty quick so that they can make some more, videos. You know what I'm saying? They got to go get on that private jet that costs $75,000 for one flight, right? So all that money they just made online doing their guru thing.
Yeah.
And look, there are legitimate coaches and consultants. I'm sitting with one right now, right? I pay money to another one that's legitimate, Yeah. So I'm not knocking the industry, but as a whole, because there's definitely individuals in it, but there are a lot of problems in the industry.
You're saying that money don't season for very long.
I'm saying that money doesn't season for very long in a lot of cases. And so then what is the problem? The problem is now the bank was already well, I don't know, this is risky, $47,000 now, and it's online. Well, and the other, 75 out of 100 of the guys that we allow in to have accounts in this industry, they caused us problems. So now you as the 25%, and I don't know what the actual ratio is, but I would guess there's more not good than good.
100%.
So the bank, that's why, for example, Stripe, which is the big, I call it Satan, but that's, my own personal feelings towards Stripe, they've got a policy now where they don't even bring on course creators, right? And info products sales. So they don't allow it per their underwriting guidelines. Now, that doesn't mean that you can't fly in under the radar for a little while, but when they catch you, and I stress when, right? Depending on how good of a history you have with them, they will either, hold your money and refund it like you said happened to you, or they may hold your money for us, 6 months to make sure there's no chargebacks and then give it to you. I mean, there's any number of different options.
I've had all those iterations, just so you know.
Yeah, and this is the problem with with the industry in the payment processing together, right? Coaches and consultants have a struggle in payment processing. And so,
do you have a solution for them?
oh, for sure. So it goes industry by industry, right? There are some people that are legitimate business consultants. And I say legitimate, I don't mean that as a knock on anybody, but meaning that's the business they're in. They do consulting for businesses and they get paid for it. And not for nothing, a lot of those guys get paid by check and wire, right? And
That's
I'm not
a good point because of the type of clients that they have.
correct.
Yeah.
But also because they demand it, because they've probably had problems in the past, course creators and things like that, where you're bringing somebody through a program that's different than a business consultant, right? You're not going in as a management consultant and you're diagnosing the pieces and parts of their business and meeting with their executive team and adding some training pieces into the puzzle, but you're really a holistic training program, right? This is different than, hey, I can teach you how to get rich in real estate.
Yeah.
Hey, I can teach you how to, iron out the wrinkles in your coaching and consulting business through my program, where you're going to take this course, you know what I'm saying?
Got you.
They've just packaged together courses.
Yeah.
So that course consulting, sales, online course creators and info products group, that's what Stripe doesn't like. But it also, because it has a lot of problems. Think about it. If on the low end of this, you have the ClickBank style stuff where people buy, I want to learn how to make an electrolysis machine so I can produce hydrogen to feed into my Honda Civic's intake. Do you know what I mean? And so I got the PDF, I downloaded it. I'm gonna charge that back. There's those types of customers.
Yeah, no doubt.
Because it's a digital product.
And more prevalent than not now. I think more people are becoming hip to the fact that they can charge back.
Well, it's not that it's not a hassle on their end, though. Like if you think about it, on their end, in order to really charge it back, you have to say, there's a couple things you could say, but the main two things that people are going to say is, that wasn't me, this is fraud. If that's the case, they cancel your card, you got to get a new number, and if that's the card you use all the time or whatever, now you got to go get all your recurring billing stuff reset up and all. I mean, it's a hassle. Yeah. The second thing is, product not as described, right? So this is where I go to the mechanic, he doesn't fix my stuff. And I'm not happy with it, and I charge it back because he said he was going to replace my transmission. I actually put a mark on my transmission to make sure he was going to do it. It's still on there. My transmission isn't new. Yeah. Right. These are the things that people can charge back for in their way, right? So they're going to say one thing or the other. It's easier just to say it's fraudulent. And then it's upon the merchant to prove that the identity of the person that used the card with them is the actual identity of the person. So this, and the upfront, right on the front end, there's a limited amount of documentation that you can provide. So like in a card present transaction, you could provide the signature and they're going to compare the signature to the person's, signature on file with the card company. You get it. There's a limited amount of things you can take it up to arbitration and then you could submit, other things. But for an online transaction, really, how do you prove it? Are you, for that $47,000 transaction, were you getting people to send in a picture of their card and a picture of their driver's license and a picture of themselves holding the card and the driver's license, when they sign up?
You just gave me an idea.
It's an idea, right? Yeah. But I can tell you, I know a very wealthy consultant, and his thing is, he says, he doesn't take more than $2,000 or $5,000 up front on a credit card. And he requires people pay on a credit card up front to get that, for deposit. The deposit's non-refundable, but then the balance is due within 30 days via wire or via check or via some means that can't be charged back, right? And so that's one of the pro tips, within the industry. Not everybody feels comfortable with that because what you want is that money paid, right? Yeah, and but you got to have some confidence in your product and your scheme to say, I'm only going to take your $2,000 up front. You got to wire me the rest of that money,
and you got to have more than 3 leads.
Well, correct, and you're gonna inevitably lose some people in between. Yeah, but it will probably be the same people that we're going to charge you back.
Yeah, for the most part. But to your point, that's a very key piece for those watching. You got to have good lead flow to do that, because you got to be okay with the ones you miss. Correct. But you got to be grateful for the ones that you have, that you can sleep good at night, not having to look over your shoulder wondering, am I going to get the ding in the middle of the night? There's been a dispute.
Correct. Yeah. No, these are big facts, because And it's very simple. How do you stop these things from happening? I mean, the first one would be you get people to sign an agreement when they sign up for your program.
Okay.
If they don't sign an agreement that says in the agreement what type of payment they're using and how much they're paying, and have them sign it. And that could be on DocuSign, right? I mean, they're agreeing to a electronic signature process when they do that, but you need to have it in your agreement, how they're paying, right? And how much they're paying. If you take payment for $47,000 on the card that they give you, but you don't have anything in writing that describes that transaction that they have signed, then they have not officially authorized you to charge that form of payment for that dollar amount. Now, email can count, right? I mean, obviously there are ways, but then it's again, like, oh, somebody hacked my email.
Yeah.
Whatever. You know what I mean? Having a way to tie the form of payment, because not for nothing, the card company is only on the hook to make sure that it was that particular card you allowed them to charge for that amount. They could still legally owe you the money, and then now you got to take it to small claims court or whatever, and you may win, right? But what a hassle that is, right?
Yeah,
so putting into your documentation what form of payment they're using, right? Visa card ending in 7652, whatever, 3333, for $47,000. That is, and then having them sign that's a way of covering your bases so that you don't have, it's not that they can't charge it back. They can initiate a chargeback, but you have a better way of winning that.
That's strong.
And again, nothing I'm going to tell you is going to guarantee you're going to win.
Yeah. But I think this puts a lot of the viewers in a better position because many people, they send out receipts. They're not sending out agreements. That's two totally different things.
Correct.
Okay.
Correct. And look, I mean, people shouldn't have an issue signing that receipt, right? You could send that receipt via DocuSign and get a signature on it also.
Okay.
Right? On top of it, like, you sign this, I charge your card or whatever, and and this stuff can be done online through a whole process, right? I mean, like, look, I mean, we're all in this industry all about funnels and this and that. I mean, you can do this through that process. They can fill out their information, they can agree and sign and do all of those pieces as part of it. But I would venture to say there's a lot of people that don't have that as part of their agreement. They just have something they fill out on a screen.
Yeah.
But it's not necessarily a record of them signing, right? So you need to have that fill in the thing that they sign.
That's strong.
Yeah.
That's strong. So administration infrastructure up front is key.
It is.
What about the person that until I just told my story was like, dang, I've been kind of selling these $300 things. I hadn't even thought about if I scale up and people want to use credit cards. Like, where do I even start with finding a merchant account? How do I even get one?
Well, at that point, they probably already have one. I mean, you need to communicate with your processor. You need to talk to them because when they did their risk underwriting on your account, it was at that $300 transactions.
Okay.
Right? They didn't underwrite you at the higher level. And look, there's a chance you'll get denied, and there's a chance you'll have to pay higher rates and fees to get approved at first, until you start showing some history that you can handle it.
Okay.
Because again, there's risk to this bank, right? To these processors on what you're doing. And look, I would love to sit here and be like, look, nobody ever gets their money held with us. Nobody ever has it. I mean, I have people that they do, $500 transactions times $100,000 a month. And then one day they come in and they do $50,000. And then they're mad that it's held. And you're like, well, wait a second, right? All we need to do first is we need to just provide documentation.
Okay.
And we need to know, is this something you're going to be doing on a regular basis? Or is this like a one-time, like a restaurant or giant catering gig that you did? Congratulations. But like, hey, we want to make sure that like one of your employees didn't fat finger $500 into $50,000 because that person's going to dispute that. And if you take that money and then that money disappears or whatever, then that's going to be a problem. So it behooves everybody that the process, because there's also things that happen fraudulent. I'll give you a perfect example. I had a dentist recently, client of ours. Obviously, his stuff's big ticket. He's charging $5-10 a pop, for people's programs and stuff. And he had an internal employee that was doing refunds, and he was aggravated with us because the bank, the risk department comes in and flags it and says, "Hey, we need all this documentation. We're actually gonna like hold things up until we know what's going on here." He's hot mad, ready like, you got to get me off of this processing bank, Ryan. We need to move to another one. And I'm like, look, I'm happy to move it. I'm just telling you that this stuff only happens every once in a while. You're obviously in a very low risk industry. We need to just go ahead and provide the documentation. And then because once you do that, right, prove that this is business as usual for you, then guess what? It'll work out for you because now you've trained this account, right?
Got you.
Go into a new one, you start over from scratch. They might start holding your $10,000 transactions because of the size or whatever. Anyway, long story short.
So you got to build equity either way, it sounds
You
like.
do, but here's the thing. Turns out he had an employee doing refunds on a debit card of somebody, and they were cutting them cash back on the back end. And it was flagged properly by the processor's risk department.
They were protecting him.
And actually saved him all that money. So, I mean, not for nothing, that was a good thing.
Yeah.
So again, it's not that's always the case, right? I mean, most of the time it's just because of those types of things that happen in the industry, they have these automated algorithms based on your limits that you've had set on your accounts based on the underwriting. And anything that goes outside of those parameters, which there's going to be several parameters, how many transactions you take per day, right? How many transactions you take per hour sometimes, what the dollar amounts are, right? How often do you charge the same card multiple times, either in a day, a week, or a month, right? There's things that are variables within that algorithm scope that are going to flag things. And when things get flagged, they're going to come back to the merchant and ask for documentation. Providing that documentation then allows the risk department to say, okay, this is the reason why this happened. So we're going to go ahead and we're going to adjust this variable and this variable so that we allow those to just continue to run business as usual.
Bro, you are like opening my mind up in ways that just never happened. No, I'm serious, right? So I got this thing where, and you actually helping me overcome some stuff too.
Okay,
right?
good.
So
praise God.
Praise God. So I used to get so aggravated when I was coaching real estate.
Yeah.
And people would come to me and they're like, man, this stupid lender asking me for this document and that document. And I'm like, you do realize they're giving you $300,000 to LLC
Yeah.
XYZ,
Yeah,
right?
yeah.
That you just made up and created.
Right.
To go renovate a house that's falling apart based on your assessment of what it's going to be worth after you complete it, which you ain't started yet. And you upset because they asked you for a couple pieces of paper?
Right.
So I listen to you now from your perspective, right? Because on the other side, we're aggravated. Man,
sure.
They just asked for this. Now they're asking for this. I just want my money. And when you look at it, it's like, but they're giving you a means to collect it that you couldn't otherwise do. And they're just saying to help us help you.
Right.
This is what we need from you.
Sure. Let's not make a mistake, right? Like we sit in between in the way that we're the merchant advocate,
Okay.
right? And the reason that works for us is because we really are on the merchant side. So we're going to bat for the merchant in those cases. And really, like, we're not going to take on merchants that we don't like. You know what I mean? Like, that's one of the benefits that we have is when we're bringing people on, it's because we want to work with them.
For sure.
And so, I get fraudulent applications on a weekly basis. People we found you on the internet. Look, I know that I'm working on my internet presence, but my presence ain't so good that people just go to my website and apply for merchant accounts out the blue, right? It just doesn't happen that way. They usually come through our lead portal. You know what I mean? They come through some other means, and then we direct them to the application.
I hadn't even thought about that part.
Right.
People coming through the back door. That's crazy.
All the time. And so, gosh, that got me off on a tangent. I don't even remember.
Yeah,
now my brain's going on a whole other side.
Yeah, that's crazy.
Gosh. So the documentation piece of the puzzle, like for us, we sit in the middle as the merchant advocate because the banks and the processors, which right, we're not a bank, right? Or a processor technically, but we sit in the processor seat, if that makes sense.
Okay.
Right? We purchase, like, think of us like a small phone company where, like, you have Cricket or, whatever, all these other smaller phone companies. They buy space on Verizon or T-Mobile. We are buying space on the big networks, and then we're using that space for our processing. That's how we function in the marketplace, just to give people an idea of how that works. But we work on the merchant side because that's our customer, right? We're the processor's customer as well, right? So us and the merchant are together kind of on the same side of the table, so to speak. The processors and the banks are doing these things to protect themselves.
Right.
And they just want to make as much money as they can without putting it at a risk level that is uncomfortable for them.
For sure.
So the policies and the things that they do are with that in mind, right? Just like insurance, just like lending, right? They want to lend you the money, right? The interest is front loaded. They want to get you paying that interest as quickly as possible. And then you know what? They want you to unload that thing in 3 years so that they collected as the highest amount of interest that they could with the lowest amount of principal, having you pay back most of that money
all over again.
and start all exactly right.
Yeah.
And rinse and repeat, right?
Yeah.
And that's the name of the game for them. Same idea within the processing industry, right? They're getting their percentage of it, which is another piece of the puzzle. I can't tell you how many of our clients over the years think like, they'll be like, oh, you see what we're doing. You know what I mean? And they think that because their merchant processing bill's $3,000 or $5,000 or $10,000 a month, that we're getting that money. And they look at me like, like I'm surprised Ryan's not driving the Rolls Royce yet. You know what I mean? It's not that we can't get the Rolls Royce at this point, but like, not necessarily my jam. However, we are like, as a processing, partner, we're skimming off the top. The biggest amount of that revenue that people pay in processing fees in 99% of cases is going back to the bank that issued the card to the cardholder. So if that person comes to you with a Capital One credit card, it's Capital One that's getting the majority of that amount of money.
Got it.
The fees from that card. And so the reason the processor even exists is because you have 4 major card brands, right? You got like 3 or 4 other card brands if you count them, like Dinerware and JCB, which is in Chinese brands, Union Pay, things like that.
Okay.
Right. And then you got in the US domestically, we've got like 15 or 17, debit card brands, right? Maestro, Star, Pulse, right? All the different things that we flip over the back of your card, you see logos, right? So there's a lot going on there.
Yeah. Because I never heard of 4 of those you just said.
And
levels to this money thing. Just
yeah. Well, and you got to think that it's banking, right? And I mean, the tallest buildings in every downtown are banks and insurance companies.
That's right.
And insurance companies are just banks in disguise. Okay,
That's
so
wrong. That's
so
good.
it is what it is.
Yeah.
And that's part of the reason that like I love this industry so much from a financial security standpoint, and that's why I'm always like trying to tell people like, look, if you can delay gratification long enough to build a book of business in this industry, I mean, we are literally holding on to the coattails of Bank of America, of Chase, of Capital One, of American Express, of Visa. Like, you think these guys are look, you start messing with their industry, the CIA's on you. You know what I mean? Like,
sure.
like you're going to end up at the bottom of a lake somewhere, right? And so that's them, right? We're just hanging on to the coattails, And the industry is so big and so vast, trillions and trillions of dollars being processed, that like the opportunity, like all I need is a little sliver, right? I mean, I need a sliver of a sliver. And the beauty is there's so many different industries involved that take payments that like whatever niche I want to be in, the sky's the limit. I can do whatever I want, right? I can either do a bucket shop where I take on all different industries, or I can specialize in one industry. If I really love mechanics and auto garages, I mean, I can focus on auto garages. I can do all my business in the auto industry. And then now I'm even better at helping the auto industry with payments because of the fact that I deal with so many that I've now specialized. I have specialized software that we provide to them. You know what I mean? Whatever, That's things, good. Right? All in the payment processing industry,
So let me ask you this question. What would you say, and this doesn't have to be coaches or consultants specifically,
sure,
but just new business owners in general, that are looking at some point in the immediate future to start utilizing payment processing. What's some things that they can do for themselves as a favor to prepare themselves for when they want to present themselves to someone like yourself or even directly to the banks?
Yeah. Well, know before you go is one of the pieces. Know what industry you're in, if it's high risk or not. And if you are getting into a high risk industry, then just understand ahead of time. Like, people are unhappy in life for one main reason: unmet expectations. So that's just a basic fundamental human nature issue there. And the reason that they have unmet expectations is exactly that. They expected one thing to happen and something else happened.
Yeah.
And there's a gap. And the bigger the gap, the more unhappy, right? If you go with knowledge, then there's a smaller gap between those two, which means you know what to expect. Even in the most high risk of industries, which I shouldn't say that. There are some industries that are always going to be high risk. You're always going to be the redheaded stepchild, like online gambling, adult entertainment. I mean, there's which I don't deal in either of those industries for that purpose. It's just too much trouble even for me to bother with. And like with the adult entertainment industry, I'm not interested in dealing with those people, right?
For sure.
So, but there's other industries that, like coaches and consultants, that are really doing good for people, right? They're really helping. And so then it's more work on my end or even like nutraceuticals, supplementation and things like that. Like I've got a guy right now who has a really cool supplement that's, people are having a lot of success with and whatnot, but because it's not a like, how do you, like a normal substance, right? I don't want to say normal. It comes from like special mushrooms, right?
Okay.
So
which has been a wave recently.
It has, but in this case, this is literally from like Native American reservations and things like that. This is like a specialized product, has a bunch of healing properties. But like the problem is the payment processors are going to make sure everything is legal, right? So they need to know, like, they're going to ask you for clinical analysis.
Oh, like FDA type level stuff?
Meaning you should be going through and making sure, not FDA, because FDA doesn't mess with supplements, right?
Okay.
That's why like it's supplement facts and not nutrition facts on the back of a supplement. And they'll say the claims on this have not been, passed through the FDA or whatever, whether it works or not. I mean, it could be, echinacea and golden seal root. Obviously that helps if you're getting a cold, right? Mm-hmm. We all know this by now, but the claims aren't, so there's certain things that are, the banks will look at that and say, yeah, of course it didn't go through the FDA, but it's echinacea, right? As long as you have a lab test that says that your product is certified, it actually is echinacea, we're good. So there may be things that they require, from a lab test on your product. There may be things that's big in like the CBD industry. They want to make sure there's no THC in your products, right? So and depending from state to state, there may be things, right, that you didn't even know you needed to do in order to do it, but the bank knows.
Bro, so to that point, you got to help me. So how the vaping industry has got to be going through a thing right now.
Oh, 100%. Yeah, but brick and mortar vape. So okay. This is a perfect way to like a perfect case study example to describe why this is the way it is. Okay. So you talk about risk. One of the big reasons that banks do things the way that they do in general is because of the guidelines passed down by the FDIC. Now, the FDIC is the Federal Deposit Insurance Corporation. It is a government insurance entity that insures the deposits at all banks. Okay. So, like, that's why when you put a deposit in a bank, they say it's FDIC insured. It used to be $100,000. Now it's like $250,000 per depositor, right? Might even be $500,000. I don't even know what the limit is. I think it is $250. Yeah, there you go. Yeah, look at you. Yeah. He's like, no. So ask me how I know. I have to go check some balances and move some stuff around right now. If that's you, congratulations. So because of this FDIC insurance and the guidelines that come with it, because remember, anytime the government gets involved with anything, especially anything that involves what the government perceives as its resources and money, which when they're insuring something, it's government money, then they're going to now put their strings into it and their stipulations into it. Hence, like the whole Department of Education thing that's going on right now. The reason the Department of Education is such a big deal is because it's technically illegal for the government to be involved with education at the state level, right? But they can give money to you as a state with guidelines on that money.
Got it.
Right?
Got it.
So this is the loophole that they've been using since, I think, the 70s or whatever, in order to push things like Common Core or whatever other things, school lunch. I mean, whatever. It could be good programs or bad programs. The point is the influence that it has.
Got you.
Right?
Got you.
Same thing with FDIC on banks. Man, if you talk to small banks, there's a whole department of compliance people that are terrified of failing their FDIC audit that they have either yearly or every 2 years or something like that. Well, the FDIC, being a federal organization, deals with federal law, not with state law. Like marijuana is legal in many states now, right? I mean, I think it's even legal in Oklahoma, right? I mean, who thought Oklahoma, Maybe because of the reservations or something, I don't know. Peyote, Exactly. But like California, New York, all these other states, Detroit, Colorado, right? Michigan.
Yeah.
So marijuana use, even at a recreational level, is legal in many of those states. So you would think that somebody, because it's legal in that state, would be able to sell that product. And of course, if I go to the convenience store next door and I buy, a Coke and some chips, I can use a credit card. Why can't I come to your store that's selling recreational marijuana, over the counter, retail, card present, secure transaction? Why can't I buy that? The reason is FDIC. Because those banks are not allowed, part of their stipulations and guidelines, they're not allowed to loan money to the mafia, right? They're not allowed to loan money to illegal business enterprises. And if they find out, right, based on their part of their underwriting guidelines is they're just making sure you're not doing anything illegal. In this case, the more important piece is it's not federally illegal. It doesn't matter that it's legal in that state.
Got you.
Right?
I was waiting on the catch. That's the catch. Okay.
Right. Now roll all that into the CBD industry, which is non-THC, not marijuana. It's a hemp-derived product. But how do you tell? Right?
Without testing it.
Without testing it, right? So then you have, that adds a layer of risk to the bank. Only certain banks are going to deal with it now, even though it's, a legal product in all 50 states, right?
And they pass that cost off to the applicant, of course.
And so then high risk account like that costs more for the processing in many cases. I mean, once again, in this case where you have a legitimate person that's, got a vape store. Okay. Another example with the vape stores. Well, vape stores don't usually just sell vapes, right? It's normally a pipe and vape store.
Okay.
Right? So if you walk into a vape store, sure, they may be selling like, nicotine and non-nicotine, grape flavor, that flavor, this brand, that brand, whatever. But then they're also selling bongs, right? They're selling marijuana pipes.
Got you.
Period, end of story. The minute there's glassware, the banks don't do it because it's considered legally, federally, drug paraphernalia. Right. Even though it's just a glass pipe, right? You could be smoking tobacco in it technically.
Yeah.
Nobody is though, and everybody knows that, right?
Correct.
So so
how are these guys collecting their money?
So there are banks that will do it because it's technically legal, right? I mean,
okay.
Right? It's technically legal, but the banks have to be willing to do it. Like Fresno Bank in California was doing high risk, and that's where everybody was going for all of their CBD business because you can take a processor to a sponsor bank, pair them up, and now I can now process the payments because it's underwritten by the bank.
Got it.
On the back end.
Got it.
Well, now they don't even do high risk at all, right?
Okay.
But it's because what happens is inevitably you have the people that are going to work that system. So
they're going to figure out how to circumvent.
It is ultimately somebody out there is going to screw it up for everybody. That's just how it works. And look, I mean, it's funny because we might be geeking out over payment processing. I mean, I don't get to talk about payment processing that much. Like I mean, I've been in the payment processing business, and but it fascinates me.
But I'm fascinated.
How much people don't know.
Seriously, bro. Listen, 7 years ago when that happened to me, I was devastated. Of
course,
it was the most frustrating thing in my life.
Well, you're on the precipice of I just made the most money I've ever made in my whole life, and you're like, but the bank won't give it to me? Like, but I thought we was friends. Like, what?
Now imagine this. You already got somebody with the utmost of angst about swiping their card.
Right.
And you try to call and calm the situation down, although you don't have your arms around it yet.
Yep.
And you're like, oh yeah, we're gonna have you run the payment on that particular account. You make up something, and then you get them to run the payment again, and it's like, same thing just happened.
Yeah.
And so
imagine that. Okay. So imagine this for coaches and consultants.
Okay.
That the bank comes and says, we're going to refund your customer. Mm-hmm. I mean, they literally just cost you at least 25% of your money.
Oh, for sure.
Because there's a certain amount of those folks who'll be like, yeah, especially today. No, now everybody knows problems with Stripe, problems with PayPal, problems with these, processing organizations. So, and I want to talk about, remind me to come back to Stripe and PayPal.
Okay.
These problems, people know that people have problems with their processor now. Mm-hmm. So they're more apt to like, okay, I'll provide you payment in some other way because I get it. This isn't a secure way to do it.
Yeah.
Right? And so I think there's a lot more grace from the consumer side, especially in the coaching and consulting business.
I would agree with that. I mean, even for those that understand if their card doesn't go through, you probably just need to call your bank because they're not accustomed to you running transactions that large.
Right.
That's even more common. 7 years ago, these things were not that common, bro.
Right.
And by God's grace, because I made an investment to get a mentor some 2016 in my real estate business, well, one of his vendors happened to do retirement banking. So he helped people with self-directed IRAs and all these other vehicles for their business. And he and I just became organically good friends. He became a de facto mentor of mine.
Yeah.
So when I ran into this problem, it just so happened we were just starting to bolt some of his services onto mine. So we came up with one PA, and he was like, yeah, I got a seasoned Wells Fargo account for like 30-something years. Like, we just run it all through mine.
Yeah.
So I was able to collect my first couple of $1 million because of a relationship that I had.
That's it.
While I allowed my other accounts to get seasoned with the smaller transactions.
Yep.
And now I haven't had issues in the last 5 years.
That's good.
But it took time. It took relational equity. It took, all the things that we needed to do.
Well, it's like there isn't really a credit score for this.
That's good.
Right?
That's good.
It's not like they can just go and see, all the merchant, and maybe there is some KYCs to know your customer stuff that they have in software through LexisNexis and stuff now to be able to track people down. I know there's a match list where you can get put on the blacklist if you run some stuff, if you get caught doing fraudulent stuff or illegal stuff or whatever, and they will put you on the blacklist and you will not be able to get a merchant account.
And you get flagged across the board at that point.
No processor will take you, except for those few that will run a risk on you. Although there are certain types of, like, there's being on the match list and there's being on the match list.
Yeah.
Which when you're on like the black list, then you end up in a position where it's against Visa, MasterCard's terms and conditions for the processor to process you.
Oh, I got a question for you.
Yeah.
Klarna, Afterpay, what's your thoughts? They're the new kids on the block. I'm
Sure.
not very privy. I'm just curious your thoughts on it.
I am pro anything that helps entrepreneurs legitimately get paid.
Okay.
I think that, I don't necessarily love the idea of people financing things, and that's from a different spot.
Sure.
But I think that there's a piece of this puzzle where people need sometimes to go out on a limb and take action. And if these things help them take action, then I'm okay with it, especially in the cases where it works out well, where somebody takes action, makes a bunch of money, pays it off early,
for sure,
all that kind of stuff.
I couldn't have got my first mentor if I didn't charge it. You know what I mean? So I agree with you.
Yeah.
So how does that work? So Afterpay, Klarna, do they, after they give whomever the funds, are they also the payment processor in that case, or is there another back end to even?
It's
that
a loan.
Okay.
I mean, it's just a loan. That's all it is. It's like when you go to the like Synchrony Bank, which used to be GE Capital. You used to go to the auto garage and you had to pay $1,000 bill. They'll sign you up for a credit card right there.
Okay.
I mean, it's the same idea. They're just approving you for financing for the item.
Got it.
And
on the Art Van Furniture, hey, you want to apply for a card in store today? I can get you the furniture. Okay.
Correct. $0, 0% interest for 12 months, that kind of stuff. So those were the credit card, schemes. It's Klarna, Afterpay are really doing the same thing. They're just usually splitting up in like 4 payments.
Okay.
Right. They're doing it on a smaller scale where they are able to, make their money back or whatever pretty quickly.
Okay.
But again, I mean, we don't have a ton of experience. I mean, the experience that I have with those products is in us providing softwares that will allow our merchants to link those things up to the same system as our payment processing. So when they're taking payment, a customer has a choice. I can pay with a credit card. I can pay with Klarna or Afterpay or whatever.
Got you. That's good. So going back to Stripe and PayPal, right?
Okay. Yeah.
So some that we know affectionately call PayPal the devil, right?
Yeah.
I've had the best run with PayPal.
With PayPal,
the best run. with them, right?
Good.
The money is they've given me lines of credit, just all kinds of stuff over the years. Never had an issue.
And it works until it doesn't.
Stripe, however, I've had some hiccups with.
So I mean, and there's people that use Stripe and have had no issues. So I think that it's a misnomer to like. I don't like them because they're my competition, right? And so when it works really well for somebody, I'm like, darn. They're the one that, the one that it works for, and that's fine. Obviously I am, and it's funny, I tell our reps all the time, I am in the business of putting square pegs in square holes. Exactly. I am not trying to stick square pegs in round holes. It doesn't work. It hasn't worked since I was 2 years old. It ain't gonna start working now.
That's right.
And so with that being said, like if somebody's happy with their current system, and there's nothing that I could do to improve their current system, which there's many times, it's usually I'm taking them from here to here. I'm taking a winner and making them even bigger winner, right? I'm not usually taking the loser and making them a winner, although there are cases where we can do it. But
what about the starter and making them a winner?
Starter, we can obviously handle the starters. Again, depending on the industry, right? The coaching and consulting industry is very hard to get yourself started in the payment processing side of it, but you have to start somewhere. The best way to do that is, like you said, to start with, you're not going to be able to come out $47,000 out the gate.
Don't do that. Trust me.
Without substantiating it and without having money in your account. See, here's what the first thing they're going to ask for is your bank statements. What are they looking for?
Liquidity. Can you cover this?
Can you cover it if it goes exactly?
I didn't understand that.
That's what they're looking for. Yeah. So if you were to put that out there and then there's a bunch of chargebacks on that money, if you don't have money there, then you're going to use that money to spend on whatever else you need to spend money on, right? And that's what they're worried about. So you need to have some money in your account.
The $75,000 flight to go take pictures.
Correct.
Got priorities, man.
Correct. Priorities. Right. Lambo.
It's marketing.
Right. Exactly right. I want to talk about Stripe and PayPal real quick because I think that there's going to be, this may be a value to most people because this is going to help them. I kind of explained the general industry, but the reason why some merchant accounts seem like a lot of trouble to get and it seems so easy to get Stripe. The reason is that everything on Stripe is reverse what it is on a regular merchant account. Stripe is what is called a payment facilitator.
Okay.
And not a payment processor. It is a subtle difference. For all intents and purposes, from a user standpoint, it's the same thing. Okay. But on the back end, what happens is Stripe is going to do a very limited underwriting on you. They're just going to make sure you're not, a criminal, right? And that your identity is your identity and that your bank account is a legitimate bank account. Those are the things they're checking. And maybe there's more things in their algorithm that they do, right? Yeah.
But front facing, I would say that's pretty accurate.
Correct. But I'm saying there might be some algorithm stuff because they're very sophisticated. I mean, $1 billion company. I don't want to pretend like I'm, an expert on Stripe's operations. I'm not. But what happens is they do that limited underwriting on you, which is again just like a identity check for the most part, and then you get to go start processing immediately, like within minutes. You're up and running. You can take payments. You're off to the races. Software developers love this because they can roll it into your software sign up, and then like. It's all one format, and then they can just roll you in and you're up and running so quickly. People like it because they get that immediate gratification of having an account and being able to take payments right now. I tested it. Oh, that money, there it is. It's right there in Stripe. Well,
I can't quite grab it, but I can see it.
Well, when you go to get a regular merchant account from a bank or from a payment processor, they do the underwriting up front. So they're going to start asking you for documentation and stuff like that. They want to see all this stuff up front because they're going to see what industry are you in, how liquid are you? Do you have processing history, right? They want to know about your business. What are your business practices? Let me take a look at your website. Let me see the terms and conditions on your website. Make sure you're compliant. Because if you're selling stuff online, but you don't have terms and conditions and privacy policy and all this stuff, then we know that this is going to be low-hanging fruit for somebody to sue you.
For sure.
And you getting sued, that's going to be a problem for us as the processor because then, all those people that you now can't deliver on because you don't have the resources to deliver on it, they're all going to come back and charge you back it's going to be the worst day of your life. And here comes the payment processor to be the third person to kick you in the head,
Yeah.
And
Yeah. And they're not going to teach you how to run your business.
They are not.
They're going to expect that you know how to run your business.
Correct.
Yeah.
Correct. And so that piece of it where the processor is underwriting you up front is good for you in the long run because they know you, they know what you're doing, they've already approved of it. Versus somebody that gives you an account, you start processing, anything that red flags it, now all of a sudden they hold your money, they send you an email and say, hey, please send us this documentation. We're going to look at it in 45 days. And you're like, but you're holding $150,000. And they're like, please supply this documentation. We're going to look at this in 45 days. Now, many times I've heard stories where people were able to get the documentation over. They got it settled quickly. They got their money. I've also heard many other things where people had it where they said, we don't like this risk profile. We're going to refund all this money back to the customers preemptively, to the cardholders. And you need to go find another processor.
Yeah.
This is the problem with not having the underwriting on the front end. If you go through the due diligence of jumping through the hoops on the front end, you can benefit. Now, let me tell you the more risky way, but a way that really has worked for a lot of people.
Okay.
Sign up with Stripe or PayPal, Square, whoever. Get going, get some history, right? Hope you don't get caught, right? And then now you have some history you could take with you to a processor, and that can also help you as well.
I mean, if I'm honest, that's the way I got by.
Right.
I had Stripe, PayPal, and Square.
Yeah.
And kind of did that. Just flew under the radar long enough to where I had built up enough relational equity to where,
The problem is they're getting better at their checks and stuff like that. They're automated.
So I may be grandfathered in a little bit.
You may be.
Yeah. It's a benefit to getting old, they say.
They call it grandfather for a reason, right?
Sure. Hey, but you bring up something I think is of uber importance, right? We talk a lot about failing our way to success, but I'm a firm believer that quick success also causes failure. Mm-hmm. So what you just explained is perceived success on the front end that's going to call you significant failure on the back end, potentially at the most inopportune time. Yeah. Because now you are up and running and you started to develop this cadence of collecting money. And, now you're not scared to market your business because you're like, I got this merchant thing taken care of.
Yeah.
To only get a knock on the door one day.
That's right.
Yeah.
I heard a rabbi say one time, the slowness of the redemption is the sureness of its foundation. Everybody is frustrated when things don't move quickly, right? Everybody wants everything to happen today, but sometimes allowing something to slow cook makes it taste a lot better. It just is. It just is what it is.
That's good.
And when you lay the foundations right, then it's much easier to build up high. But everybody wants to build up as high as they can right away, but then it comes tumbling down because the foundation's not there.
Luke 14:28, man. Suppose one of you want to build a tower, won't you first sit down and count the costs?
There you go.
That's strong. Speaking of which, right? I know we only got a couple of minutes, and thank you for your time today.
Yeah.
How has it been as a pastor navigating the space you're in with respects to payment processing? Have you ever had any internal conflict, one? And secondly, have you had any pushback externally as a result of your line of work?
I would say internal conflict, not too much, praise God. I think that I've been convinced of running a clean business the whole time because I really truly believe in playing the long game, right? I got into the business, when I was like 20, I don't know. I was young, in my 20s.
Okay.
So 15 years ago, however old I was then. I'm 38 now. And when I got in, right, I knew right away, like, this is a building thing, right? You build it and it compounds and compounds and compounds and compounds. And I remember probably a few years into it, there was a big company that had a big presence here in Tampa Bay, and we were taking a lot of accounts from them, right? Coming back behind them and, converting a lot of stuff. And their regional VP of the Southeast, I think he was working out of Jacksonville. He actually came down here to Tampa and was like, who is this guy, right? He actually came and sat me down for lunch. And we had a good lunch. It was great, and he was making an offer to buy our portfolio and wanted us to come up under them, right? They were like, can't beat them, join them, right? Because it seemed like they had a rep in the area for a long time and then no longer had a rep. And then it was just easy pickings, right? I don't want to say I was like the best salesman in the world, but like,
y'all doing all right.
Yeah, we was doing fine.
Yeah.
Yeah. And these were just teed up, right? Ready to go. We were just walking around knocking them out. And that was a good time too. I really that was good. It was a lot of fun. But the offer was good. It was more money than I had ever thought of at that time. Or not thought of, but you get my point, right?
Yeah, I do.
Nobody had ever offered me a check for that much money at that point.
Yeah.
And I was like, man, I'm like 27 or something. Like, if this is good now, man, it's going to be, imagine 10, 15 years from now, what it's going to be. So, I had that mindset. But that's also the same mindset that makes me make certain decisions about even each account, how we price it, how we service the customer, the decisions we make on the back end, because I want that customer for 10 years, not 2 years, not 2 months. I want them to think of us as an asset to their business, not as a leech, because we can very easily be seen that way because we charge fees on the money they make. And, that's not something that everybody loves. That's not a piece of the puzzle that everybody's like, oh, I can't wait to pay Ryan my fees,
As a matter of fact, just the opposite
exactly.
in most cases.
It is exactly the opposite. And so putting ourselves in a position where we, do things above board has always been, kind of a philosophy for me. Not just from a Christian man, godly, I'd love to say it's all because I'm holy, and all that.
Yeah,
which maybe there's a piece of that. I don't want to deny that,
I'm sure that's the foundation.
Because of fear of the Lord, but also because it's good business, right? It's good business practice. I don't have to look over my shoulder, just like we've been talking about that with payment processing in general for people's accounts. And I don't have to worry about somebody coming behind me and be like, well, you did this to me. I don't have to show up to a chamber meeting or a networking thing and somebody's, I don't let this person talk to this person. I got to keep those people on other sides of the room so that I'm trying to get this account and I lost that. I don't have that problem.
That's good.
It is good. The second thing would be, one of the funny things that happened to me is when I was ordained, the church and stuff, they posted it on social media and stuff like that. And I was officially ordained, not so long ago. So several of my clients, they'll make jokes and they'll mess with me. Because especially the ones because I deal with restaurants and bars. I deal with all types of people. It's not like I go around like you have to be a believer for me to be.
Hence my question, right? That's exactly where this question was derived from.
So, hey, pastor, make sure them fees, are low, what I mean? They give me some, kind of car I drive, all that kind of stuff, It does. I've gotten a little bit of ribbing to the point where, and it's funny too, because I was very resistant to the idea of taking on any titles, especially from a religious, faith context.
Yeah.
but and I'm not the head pastor or anything at my church. I'm the second, whatever. But
Yeah.
and we have an awesome pastor, great guy.
You collect the tithes. Ryan will be taking offering again.
Yeah, that's right. Listen, no doubt. I definitely, we deal with churches, churches got to collect money and we help them with ACH and credit cards and praise God.
But how much of a need seriously in that space though?
Oh, definitely. And there's big companies that are doing a great job at taking lots of fees from churches, and I like to be able to price that in a way to where like we have to have some margin in it because we have to service it. But at the same time, I feel like, that those things need to be going back to God's work, which is part of it. And that's a separate conversation.
Yeah. One, I think we should have someday though.
Yeah.
Because I think that churches a lot of the time forget that they're businesses.
Well, yeah. Right.
Just being honest.
Yeah.
And they need to put themselves in a better position to keep up with the times we're in now.
Yeah.
For the success of that business holistically.
Sure.
So I'd love to have that conversation one day. I think we need to bring more awareness to that.
Yeah. And and it's real simple for churches to be able to set up like a hosted payment page with a login, right? Where people can log in and they can just set their giving on recurring. Because, I don't know, something like 60-70% of people get a paycheck that's the same amount every 2 weeks.
No doubt.
Right?
That they never see because it's digitally processed
Correct.
and deposited into their accounts.
And, from a stewardship standpoint, people have different feelings about it, but automating it, make sure it gets done.
Yeah. Take the pressure off of them, I would imagine.
Well, and maybe there's a part. Yeah, exactly right. I mean, there's ways to do it. People have their funny ways of thinking about money in church, right? And I'm there to be a facilitator of however people like to get things done.
For sure.
Right. And so I'm not there to dictate people's doctrines or how they do things. Right. I'm there to help, you know, but the thought of having like the title or whatever it bothered me for a minute. You know what I mean? I'm sorry. It still bothers me a little bit. You know what I mean? But I've let it go, to an extent where I've come to terms with it a little bit,
Yeah. I think it's, God has a great sense of humor when you get to know him.
Yeah.
And I think you holding tension in both spaces is kind of funny. It really is, man. So,
Praise God.
One, I know there's people watching this, listening to this.
Yeah.
Would love to connect with you and see if you could help them in any kind of way. What's the best way for the audience to connect?
Yeah, championpayments.com is our website if you want to check that out and get any, peruse or get any information there. If you want to reach my office directly, info@championpayments.com is the best way to just get some info, right? Hey, this is the type of account I'm looking for. This is what I've got going on. If you go through the website, you get plugged into our CRM right away. That's great. If you go through the email, we plug you in. It doesn't really matter one way or the other on our end. But also, I love to connect with business owners in general, man. Like, people can ask questions. I'm happy to be a resource. Not everybody's going to sign up for an account. Like I said, the square pegs are going to be there. I'm sorry, the square holes are going to be there for us to put our square pegs in.
Sure.
Man. We're not. But the business community and the kingdom business community needs some help, and we're happy to be there for them.
100%. Well, folks, you heard. Look, by the way, this was a master class.
Okay, yeah.
I kid you not. And I love to hear y'all in the comments. This was an absolute master class. I learned a tremendous amount.
He's going to put a form on his website. Y'all just go ahead. Donations, That's
hilarious, man.
Yeah. You all bow your heads while we make the checks, checks payable to,
Oh my God, this guy. Listen, let us know in the comments, seriously, how this has helped you. Do not be shy. I can tell you that Ryan is an open book. He really loves the work he does, and he loves the people that he does it with.
Yep.
And so that's an open invitation. Don't be shy about that. And until next time, folks, we love you.
See you guys.